Cool. Welcome back, everybody. Another live trading stream. Welcome, everybody. Welcome back. If this is not your first stream, and welcome if this is your first. We're Chart Addict's #1 education service in the world for traders. Mostly focus on trading NAS 100 or NQ, depending on if you're trading futures or CFDs. Good to have you guys on the stream today. If you guys wouldn't mind, just drop a like and subscribe. That's all we really ask for. And of course, if you have any questions, if you're a member, put them in the Zoom chat. If you're not a member, you guys can put up a super chat in the YouTube comments, and we'll be able to answer any of those questions. Whether it's geopolitics, whether it's finance, macroeconomics, or anything in between, make sure to ask those questions and get some quality info from this stream. Cool. Welcome back, everybody. Another look at a live trading stream. Let's go in here, and there's been a lot of talks between Trump and the Kremlin. Basically, there was supposed to be a peace treaty. There's supposed to be a what is it called? A ceasefire between Russia and Ukraine, and then Russia has just recently attacked Kiev, the capital of Ukraine, and so obviously that's going to hinder peace talks. It's already tough enough, and so Donald Trump is asking Putin to stop or telling Putin to stop. We're going to find out here and hear the language directly from Donald Trump. Let's see if we can find his full speech here. 2 hours ago. Let's see. Side note, just for everybody who's on the stream. So I'm looking at these scalps here. So if we have an 88.6 rejection on the higher time frames, we've already had a dip back under. And so now what I'm waiting for is an 88.6 retest. 88.6 retest right here, kind of close to a double top. And then we should be able to scalp this thing down to TP2. It's going to be a very quick, very easy trade. And so make sure that you guys are, if you're going to take this trade, just kind of scalp this thing. It's coming up here very, very shortly. So I'd make sure to be paying attention if you guys want to just be in and out of this trade. All right, we'll keep an eye on this as the market develops, but let's see what Trump's got to say in terms of these negotiations. What's going on here? Combine these tabs real quick. Boom. Awesome.
We have breaking news. President Trump just spoke at the White House ahead of his trip to Italy for the Pope's funeral. Let's talk to Rachel Scott a little bit about what the president just said. Rachel?
Yeah, Diane, I asked the president about these ongoing trade negotiations, and here's the president now. You could see him walking out. He's going to take some questions from reporters, including me, on these ongoing trade negotiations with China. Let's take a listen.
When did that happen? China says it hasn't happened.
We spoke to him numerous times. So we're leaving and going to Rome, where we'll be attending the funeral of Pope Francis. Some of you are going to go. Anybody going? And it's going to be very interesting. We're going to meet with a lot.
No, that's not the one I need to see. Let's do tariffs, and then let's do Scott Besson, because Scott Besson was also talking. It wasn't at the Economic Club. I'm trying to remember where he was speaking. It was like the international fund or international money fund or something like that. Let's see if we can find this. They keep making it so damn tough to find certain pieces of info. U.S. Treasury Secretary Scott Besson on global market shadow Trump tariffs. This was streamed a day ago. No, what is this? Trump on Putin. Oh yeah, this is when he was talking with. Dude, why is everything being hit? All the good news is always hidden in the back. There's something seriously broken about this algorithm. Or is deliberate. We'll see. It's 2 weeks ago, 1 day ago. That's only 2 minutes long.
The United States has been very good to a lot of the years. The United States has been very good.
Also,
Here.
There we go.
being here. We appreciate it. And we're going to be having a meeting in the where you'll
Yo,
be
come
able
on, get in, we gotta be out.
to ask some questions. It's also a pleasure to have my friend who did such a good job at NATO, my great friend, right? So you really
Oh,
did.
this is the roundtable of ambassadors. Bro, what is happening with all this old news? Oh, here we go. Lord. Excuse me. Sorry. I didn't mean to use God's name. But yo, allow YouTube ads? What the No. Playosity? But why the fuck would you think that I would ever use a service called Playosity because of a fucking YouTube ad? Roy, why don't you have YouTube Premium? You're rich. Listen, how about you mind your fucking business, people? All right, I'm not getting YouTube Premium for the CA. I got it on the other account, which for some reason, which makes no sense, but I'm not letting them win.
But you want to lead. What you're asking for is simply getting back to factory settings, right? Focused approach, and deal with the issues that you see are most paramount. Correct?
Correct. As I said in my confirmation hearings, I think U.S. engagement with the international financial.
I'm gonna let this thing load up just so we don't have any hiccups with this stream. All right. Okay, so price is approaching that 88.6. Just a heads up. So for the scalps, no, my shit just disappeared. Okay, let's go.
Multilateral institutions, we should engage and we should be in it to win it for the American people and for the rest of the countries and for the client countries.
20 years ago, a senior U.S. Treasury official gave a speech very similar to this, calling on the IMF and said the IMF was asleep at the wheel and dealing with imbalances. Hank Paulson started the strategic economic dialogue with the Chinese. Every Treasury secretary since then have had an approach. So how will you do this differently? And how do you think that you'll proceed in this approach? What is your philosophy? What is your tools? And how will you execute on this?
Well, look, I think that our move toward reordering the financial or trading system is a start. I think that today, as I reaffirm our engagement, but set up a list of core principles and back to basics for the institutions. And again, being from the private sector, we want to see results. And we want to see timelines that, as you and I were talking about backstage, global rebalancing has been a topic for more than 20 years. And it's some countries may have a 100-year perspective. We don't.
Right. China obviously is an important part of this administration's foreign and economic policy. You'll be meeting with your Chinese counterparts. What will you tell them in the sense of how they obviously are aware that there's huge imbalances, their manufacturing capacity is enormous, especially in things like automobiles. How will you help them understand that it's not just about talking, it's about executing?
Well, look, I don't think I have to help them understand. I think they understand very well. And it's just a matter of impetus and will.
Sorry, just a kind of not even a side note, main point. Over here, I've gotten a lot of questions, especially when I'm doing the one-on-one kind of check-ins, the masterclass check-ins after you finish the class. If you haven't scheduled yours, please do it. We do the one-on-ones. And a big question I keep getting is about the execution, which is what, candlestick confirmations should I be waiting for when the market gets to these zones? And if you guys have been seeing me trade, you really don't have the luxury with this system of waiting for the candlestick confirmation at the zone, because by the time the market rejects, it's probably already too far. It's too late. So instead, I'll show you guys kind of the simplest execution model, which is the tester entry and then the double top entry. So I'll put one contract at the ideal entry zone, and I'll put 2 or 3 contracts as the market goes into a bit more drawdown. And so that's what I'm waiting for now. I'm going to show you guys how that looks when the market goes through the 88. I'm going to put in my first order, and then I'll put in the second order as it goes into drawdown. I might go down to the smaller timeframes here, but I'm noticing that there's not necessarily more or better information on the smaller timeframes. It's just a lot more mess. It's a lot more information and data versus I want a simplified view. So I'm going to stay on the 15-minute here. As soon as the market breaks up into the 88, I'm going to take the short. Stops above the 1.17. And then as soon as the market goes into a bit of drawdown, I'm going to enter 2 contracts. I'm telling you guys exactly what I'm about to do, not what the market is going to do. This is the difference between, let's say, like a real trading stream like this and most trading streams you'll be on is I'm not here trying to predict what the market is going to do because it's out of my hands. But the more clear that I can get about my strategy, regardless of what the market does next, then I think that we're getting somewhere where you guys can use this info and make it as practical as possible. Okay? So my first entry is going to go in. Stop losses are going to get set. And then let's see what we got here.
So I believe I first went to Japan in 1990, 91, within 12 months of the peak of the bubble, and a decade of that unwind, a decade of malaise. And then in 2012, I ran across a fellow, 2011, who was running for prime minister named Shinzo Abe. And he knew that Japan needed change and implemented it very quickly. 10 years later, more than 10 years later, Japan has had a remarkable economic run. And I think that our Chinese counterparts that will come to this realization, and if some of our policies, sometimes it takes an external push. Right. Alternatively, what I have said previously, there is an opportunity for a big deal here, that the U.S. is looking to rebalance to more manufacturing. The identity of that would be less consumption. If China is serious on less dependence on export-led manufacturing growth and a rebalancing toward a domestic economy,
which, by the way, is not China's goal. It's America's goal, because China is benefiting from being a net exporter, because basically they are the manufacturing hub of the world and they're able to make money from the rest of the world. What America wants to do is onshore manufacturing to become a manufacturing hub ourselves. And so there's 2 benefits. Number one, there's a boost to economic productivity, because if we're making all this stuff here domestically, then we're going to be a lot better off, especially from a national security standpoint. And then number 2, we're a way less, and this is again to the national security point, we become less dependent on adversarial countries like China for number 1, basic goods, but number 2, for strategic materials like, any raw materials or core materials for weapons manufacturing or for medicines, things that could be devastating to our economy if you give the trigger, like the bomb switch to your adversary. And so what we want from China is to become a more balanced importer-exporter, a more balanced trade partner, but that's not necessarily what they want. They want to keep the world dependent on them because that's where their value comes from. The U.S. value comes from the petrodollar system, is our control over global oil trade, and the U.S. dollar being the world's reserve currency. These are our leverage points of advantage. Some other countries, they have a leverage point of advantage from having natural resources under the ground. And so they have natural wealth, and that's their country's natural wealth. Iran is included in this. Saudi Arabia is included in this. Venezuela is included in this. China does not have the global reserve currency, and they don't have the natural mineral wealth. And so the way that they've been able to basically become number 2 in the world is becoming a manufacturing net exporter and making the world stuff. So just as a side note, so you guys understand the entire game, the layout of the chessboard. And now that you guys know that, you can see why these peace talks or these negotiations are very tough, because they don't want what we want. and we don't want what they want.
I think they use the term dual circulation. Well, it's right now it's really singular circulation. And if they want to rebalance, let's do. This is an incredible opportunity. And I think if Bridgewater founder Ray Dalio were to write something, he could call it a beautiful rebalancing.
Indeed. But a big part of that will also be our own fiscal imbalance. And as you mentioned, we're running deficit 6% of GDP at the top of the cycle. Not sustainable, as you yourself have pointed out. How important is it to also address our fiscal imbalance as part of this larger rebalancing?
Well, it's very important that I think most people in this room are trained economists, and everyone knows that a trade deficit emanates from three things.
My daughter is being treated for leukemia.
There's nothing that I'm going to say about this commercial. Don't worry. We fully support St. Jude's. We do the charity streams, which, by the way, thinking about doing a charity stream here very soon. We usually stream for 24 hours. We get the greatest guests to come on, and we usually partner up with St. Jude's Hospital in order to do it for the kids. So shout out to St. Jude's and everything that they do. Big supporters, and we're definitely going to be doing a charity stream here. So if you guys thought I was going to talk shit about this commercial, I ain't that fucking low, bro. Chill.
External trade policies.
Roasting the kids would be relaxed.
Which we are intent on addressing. And the external trade policies can be tariffs, non-tariff barriers, currency manipulation, and the state subsidy of labor and means of production. So terms of trade or trade regulation is one. Two is our budget deficit. So the larger our deficit.
All right, I put one more contract, and as soon as we kind of get this like double top, maybe a little bit further in, I'm going to enter 2 contracts, make it 5 total. And then as soon as the market comes down to the first take profit, I'll close 2 of the contract, or I'll close probably 3 of those contracts, hold the rest, and trail my stop losses to avoid any issues with the trailing drawdown.
Based on the dollar will adjust based on markets. Everyone asks me, well, what does a strong dollar mean? And to me, the strong dollar means having the policies in place to deserve capital flows and have confidence. But it doesn't mean the price on the Bloomberg screen every day. And it also has different meanings in terms of bilateral the prices. So it's really 3-pronged. But Tim, to your question, I have talked about we did not get here quickly with the spending. The U.S. does not have a revenue problem. We have a spending problem. And I have suggested when I first met President Trump to talk about joining his campaign 2 years ago that we need to get back to a long-term sustainable budget deficit of something with the 3 in front of it, which works. We have 2% nominal growth or 2% inflation, projected 1.8% growth, which I think could be much higher if we implement our economic policies.
You reaffirmed the strong dollar policy first articulated by Bob Rubin. Valerie Giscard d'Estaing in the 1960s talked about U.S. exorbitant privilege of the dollar. There's some in this town who question that privilege and actually see it as a burden. Do you see it as a privilege?
That the U.S. sits at the center of the global economy is enabled by the use of dollars, and that it's natural that the usage would come down over time. And I think that the U.S. will always, for my lifetime, be the reserve currency. I actually am not sure that anyone else wants it. I can't remember, one of the European officials said today, maybe it was Mr. de Guindos, I can't remember, said, oh, well, the euro could become a second reserve currency. Well, we've just had a substantial appreciation in the euro.
Well, I would sooner use the Chuck E. Cheese not the tokens, not even the fucking tokens. I would sooner use Chuck E. Cheese tickets, the ones that you go turn in for the pro. I'd sooner use Chuck E. Cheese tickets than the fucking euro as the global reserve currency. As I've been saying this for a long time, but the global reserve dominance of the US, obviously everybody wants to challenge it. It's not like everyone's happy with it or they're kind of just, everyone's sucking it up because if you look at the costs to get off of the US dollar standard, to unwind all of this global trade, you can't. I explained this on the last stream, but for example, like China was trying to dump US bonds. If you're going to dump US bonds, guess what? You're going to have to sell them to somebody in an external currency, whether it's the euro or whatever it is, but usually it's the dollar. And so let's say that you do sell it in euros. You sell it to the European Union and the Bank of England, for example, and then you get those bonds off. Now, England is holding those bonds. Someone's holding US debt at all times, whether it's the form of currency or whether it's the form of bonds. And so that I think is the biggest thing to pay attention to is the cost of switching to a new model would be so heavy, it would destabilize the world, and nobody wants to take that step. It's not worth it unless there's like a global, like a world war or something like that, God forbid. It wouldn't make sense to go through this much pain to destabilize global markets and global economies.
For export economies, it's a lot of pressure. And look, I think that the reaffirming our belief in these international institutions is also.
We empower those who act, those who see the correlation.
But CME Group, really? Lord have mercy. But as if the CME Group doesn't have enough money. But you're the exchange. You are the money. The hell you need my $13 subscription?
Much more buoyant atmosphere in Europe. They see this as an opportunity for them. I said something about a possible renaissance. I was heckled a bit, but I actually am pretty positive on Europe. Do you think this is an opportunity to shift some of that demand? The world has relied on U.S. final demand to shift some of that demand for Europe. Is this a positive time for Europe?
Look, I think it can be.
Short answer, no. He said it can be. Yo, Besant is media trained like a motherfucker, dude. No, Europe is not in good shape. Look at the euro. We can go through this in a second once this trade plays out, once I make some money. I'll show you guys what the euro is doing, especially the euro versus the dollar, the euro versus the Japanese yen, and the euro versus, let's say, like the Great British Pound, who's actually been kind of insulating themselves from Europe's bad decisions. I'll show you guys why the euro is not in a good shape and the European Union is struggling as an economy.
And it wasn't in a straight line. It wasn't always the way a trained diplomat would have done. But I think we should all congratulate President Trump. He has done what a succession of European leaders have tried to do for the past 26 years since the advent of the euro, that whether it's the French, the Italians, other European countries have tried to get Germany to increase their fiscal spend and drive the European economy. And that I applaud these nascent efforts because it's a combination. It's a combination of economic stimulus, and it is a combination of burden sharing on the European continent for defense. And as I said many times before, economic security is national security is economic security. So if this European plan works, that I applaud it. I had a private meeting with the Spanish finance minister last week, 2 weeks ago, and he said, you're going to be pleasantly surprised with where we go on military spending, and that this 2% number today, he was right.
So you're...
And just a kind of a context here. So America is essentially subsidizing NATO defense. And so every country was supposed to be paying at least 2% of their GDP on defense. That way that coalition as a whole could actually be like a respectable force around the world. Now, a lot of the countries were paying far less than that, some almost nothing, and then the US was subsidizing the rest. And so Trump came in, was like, yo, you guys have to pay for your own defenses, especially if you're going to go and get us into these wars all the time with Ukraine and kind of take all these moral stances. The only reason that they were so emboldened to do that is because their economic capacity wasn't on the line, or sorry, their military capacity wasn't the one being tested. They knew that they had U.S. support. And so now that everyone's paying up their fair share, I think that we are less likely to be involved in a European conflict, which kind of insulates America from any outside intervention or any kind of like provocations. And I think it just makes the European Union much more, and NATO as well, much more able to defend themselves or just to like even avoid a conflict. If you have all the guns in your house, it's probably the last house that's going to get raided on that street. It's probably the last house that's going to get broken into on that street. If they know that this is the weakest house on the block, then you kind of make yourself a target. So I think this is crucial for Europe and for NATO to get some respect. And that's kind of the context behind that 2% number that we keep hearing about.
Already taking on these tasks. You have China, more consumption, less investment, deal with their manufacturing excess capacity. Europe's a great opportunity. The U.S. rebalancing here, including on fiscal. So what do you want?
Also, in terms of this trade, buyers are being very aggressive right now. If we don't have a rejection at the 88 and we have a closure above the previous high, then the market will just more than likely hit a continuation model 1. So continuation model 1, as you guys know, is break through the sell zone and then come back and use it as support. Okay, so if we just see a straight breakthrough and we don't have any rejections, then we know that this is going to be the continuation model 1. But I'm still hopeful we get this rejection back down to TP1, and then I'll be able to unwind this trade. Okay, so double top is in effect looking for the market to break back down to TP1. I'm going to secure partial profits, and really not even secure partial profits. Once it breaks back under break even, I'm going to be de-risking or de-leveraging this trade, just kind of unwinding some of those extra positions, holding some great positions. Once TP1 hits, I'll secure some partial profits, just like we spoke about before the trade played out.
The IMF to do? What would you like to hear from Kristalina over the next couple of days, or the board, in the new direction, again, back to factory settings direction? What do you want to hear from them?
Well, again, I think it's just been mission creep.
Yeah.
And just occasionally you have to trim your garden when the weeds grow. And I think that it's back to basics. What are our priorities, and how are we going to judge success?
And the World Bank, you discussed about graduating the medium-sized countries that should have graduated some time ago. That changes the commercial model of the World Bank, but obviously you think that's important, that they need to be graduated.
Yes. Yeah. I mean, it's just, as President Trump says, it's common sense that that you can't have the second largest economy in the world. And it's as I said in my speech, I applaud the rapid growth, but you don't get both. I have a teenager who sometimes wants to be treated like a child, sometimes wants to be treated like an adult. And
yeah. I got one of those too.
Yeah. And it's an adult economy.
You mentioned energy, specifically nuclear, during the campaign.
All right, so we're getting a break back under break even. And so the de-risking is about to happen as soon as this thing goes into break even. Probably like 5 more points to the downside. I'm going to start to de-risk. There we go. One more push down. That's all we need. One more push. Okay, we're going to get this push down. And then you guys already know what I'm going to do. I'm going to be securing or de-risking first, and then I'll be securing partial profits after. So I'm going to let this video run and just do commentary, but just wanted to make sure that you guys have a reference point here for this trade. Okay, now that we're in profits, you see this 190. So what I'll do is I will secure 2 of those positions. Now, because I was kind of dollar cost averaging into, oh wait, you guys can't see it. Because I was dollar cost averaging into the trade, as I secure these positions or as I de-risk, my entry price just gets better and better, my average entry price. So now I'm even more insulated from that, from the drawdown, because now my stop loss is much, much closer, because of how much better of an entry. When your entry is all the way down here, the distance from your entry to your stop loss, pretty big. When you move your entry from down here all the way up here, now the distance between your entry and your stop loss is a lot smaller. You can go a little bit heavier on the risk or whatever it might be. and you just have a lot less money on the line or a lot less risk on the line, money-wise, like dollar amount-wise.
Campaign, and since you've become secretary, you've talked about energy production is one of your important legs. The U.S. produces about 13 million barrels of oil a day, the largest producer in the world. What more do we need to do here, and how can the World Bank, what do they need to do more to encourage fossil fuels as well as nuclear, and I assume all the above?
Yeah, look, the
Shop.
Bro, if a creepy dude is over your shoulder like that, that VPN is not going to help you. Get the strap. Get the strap.
kind of this, the sine qua non for economic growth is energy abundance. And we need to drive the right combination of the crawl, walk, run for these countries in terms of sustainable production. But by sustainable, I mean robust and baseload,
Right.
not some what I would call almost a luxury belief that we have in the West. Like they are worried about pumping water. They are worried about heating their homes, running their hospitals. And we've seen that the intermittency doesn't work. Even kind of in middle developed countries, maybe like South Africa, that seems to have rolling blackouts.
Right.
So that's not a model. We want to have a model of strong baseload and then bolting on the alternative production, as opposed to beginning with alternative production and then having this latency or intermittency that makes it impossible to industrialize.
In the final minute or two, let me just turn to financial intermediation. There's a famous adage that capitalism without capital is just another ism. The institutions you see here are important.
Capitalism without capital is just another ism.
Intermediaries, both in the capital markets and in other forms of financial intermediation. What is your vision, especially for the U.S., in terms of financial regulation? What do you want the industry to look like? Obviously, the capital markets, the U.S. is a crown jewel of this economy. How should we encourage that not only here, but abroad?
Well, look, I think
also, everyone's always asking me, like, when do you move your stops to break even? So if you guys can see here, we've gotten a beautiful rejection, but then the market's coming back up for a retest, right? So if I had moved all my stops to break even and protected this trade, very good chance that it's going to hit all of my protective stops and then come down for the next push. So in order to avoid that, don't move your stops until the retest, as we teach in the class. Do not move the stops until you see the second retest. Once that retest happens, then you see the next impulsive push. That's when it's typically more responsible to move your stops and trail, because then you're not just going to get kicked out and then the market runs your way, which leads to a lot of the FOMO. When you're in a good trade, you're being way too defensive and you're trying to play it safe, and then you end up, let's just say, either having a very tight stop loss or moving your stops way too soon. It hits your stops and then it goes your direction. Now you're, oh, I was right the whole time. Let me just get back in somewhere. And that's usually where a lot of the problems happen. So understand the market and understand your system. That way you're not making discretionary decisions all the time. Instead, you can use a systematic approach that's more consistent. So that way it doesn't depend on how you feel that day or how your perspective is in the markets that day. Second retest comes, then I can move my stops. Otherwise, it's a world of trouble. And you just have these rules that sort of keep you safe. Now, we are creating some support at our sell zone, but I'm very confident that once we're done retesting, we have one more impulsive push to the downside, then I will be protecting this trade.
I've been getting a lot of questions on private credit. And I think that private credit is an interesting addition to the U.S. mosaic, and it is the depth and breadth of our capital and credit markets.
Last interruption here real quick. If you guys wouldn't mind dropping a like on the stream if you're watching this, because YouTube seems to be hiding this stream because I say a lot of naughty things. And so if you guys are able to support, just hit the like button real quick or just drop a comment. And then I think YouTube will recognize that and recommend it to all of our subscribers who just don't seem to be getting the alerts that we're going live. So that'd be very appreciated. Just drop a quick like, takes 2 seconds.
Powers the U.S. economy, and it's the innovation there. I think that private credit's a very new and interesting part, but it is happening outside of the regulated ecosystem.
Right.
And I was a historian, and I think
That's exactly what we need at the helm is another fucking historian. So I mean, he's not even a historian, man. You are responsible for Black Wednesday, the single most important trading day of all time. You crashed the Bank of England. Yeah, I'm just a humble historian. But if you're not a trader, then I don't know what the fuck we are. I don't know what I am. I guess I'm a bumbling buffoon.
that is a distortion of the system. And it tells me that the post 2008 regulatory corset is too tight on the regulated institutions. And we want to deregulate them or make them more able to provide the opportunity to lend to the American economy and perhaps into the international economy in a smart, safe, and sound way. As we've seen, the history of financial crises is a overreaction on one side. And I think that we had a regulatory overreaction. I convened something in the US called FSOC, the Financial Stability Oversight Council, which convenes the regulators. And I think through partnership with the 3 US banking regulators of Federal Reserve, Controller of the Currency, and the FDIC, we can come up with a system that makes the regulated financial system.
He's giving me too much to have to comment on, so I just can't stop. All right, control of the currency, damn near useless at this point because the Fed is really creating most of the money. It's like obviously banks are creating the money, but the Fed is the one that's issuing the debt. The control of the currency was the one that was in charge of basically printing the money and handling the money supply. They're out of the picture. The FDIC is fucking broke. It's bankrupt. If there was a banking crisis, they're not solvent enough to step in. That's why they started the Bank Term Funding Program, the BTFP. It's like they had to create a subsidiary program at the Treasury to bail out those regional banks like Silicon Valley Bank. You guys remember that whole regional bank crisis because of the bonds? So there was like duration risk. And all these banks are holding these long duration assets on their balance sheet, but then people want to withdraw, and so you have to basically all your trades are in drawdown, and then your investors want their money back. That's the best way I can explain it. And you're like, well, if you guys just wait for these trades to go out of drawdown, then no one loses money and you guys can get your money back. And they're like, no, we want it now. And so the banks had to sell off assets at a loss, eat up those losses, and then give back the money, which they couldn't do. They literally just crashed off the strength of that. And so the FDIC couldn't step in for those. And so the Bank Term Funding Program came in, undid all of the quantitative tightening, pumped hundreds of billions of dollars back into the system. And so the FDIC and the comptroller are useless. The Treasury, obviously, the strongest body economically in America, except for the Fed.
Prosper again. And what the U.S. has that is different than most other G7 countries is just the number of financial institutions. We don't have 5 big banks, 3 big banks. And in the U.S., the community and small banks, which are provide 70% of agricultural lending, 40% of small business lending, 40% of real estate lending. And in the U.S., we've had this incredible boom on Wall Street. I think Wall Street can continue doing well. But I think it's Main Street's turn to share in the prosperity. And I think it was the pullback by the small banks, the post the GFC, that's kind of created this stagnation on Main Street. And we're determined to fix that.
Mr. Secretary, I always say Treasury is the sober voice of reason. What we've heard today from you is a sober voice of reason. We wish you all the best. Ladies and gentlemen, a round of applause for Treasury Secretary.
Oh, this is a name that everybody should know. Kyle Bass. So if you guys want to know, I'll give you guys actually my actual resources for a lot of the information that I get. But somebody that I've been watching for years related to China and really understanding the Chinese economy is economist and investor Kyle Bass. Now, Kyle Bass has been attacked relentlessly for his criticism of China and for just like the sides that he's taken. But Kyle Bass, one of the smartest economist that I've ever seen. He's a little shady figure. I don't know if he's running a think tank behind the scenes where he's providing information to the US government. I don't really know what his current deal is behind the scenes, but he is extremely knowledgeable on the insides of the Chinese economy. He has business partnerships and kind of like inside people in China, and he's got the most relevant information. So I've actually never seen Kyle Bass on CNBC, but I guess this is how deep the current tension is with China. Is somebody like Kyle Bass is getting called in because we're kind of running out of talking heads and what is it called? Subject matter experts who don't know shit about China. This is really cool to see. Kyle Bass, just so you guys know.
And Trump telling Time magazine in an interview published this morning that President Xi has called him and has admitted.
In terms of the trade, I am keeping an eye. You guys know the rules until it breaks the previous highs. The trade's still valid. So I'm going to have to be patient here. There's going to be some period of drawdown, but I'm going to be patient and see if we get this pull back to the TP1, which is still very likely. Even if the market's going to continue bullish, I still believe that we have that correction back to the downside. It's a Friday. And so could the market just be aggressive and just sort of at the end of the week, for example, all the trades that were taken at the beginning of the week by some institutions that have a duration or like, let's say an expiry at the end of the week. So they're good till like they expire at the weekly close. A lot of those trades have to get unwound. And so if there's been a lot of selling pressure throughout the week, then there's going to have to be buying pressure towards the end to undo all those trades. That's why we typically see that one-way motion on Fridays. But, you know, markets don't move in one direction. There's still going to be a smaller time frame correction here, and that's what we're kind of banking on. So eyes are peeled to a potential continuation breakthrough, but we're holding for now.
Administration is in active talks with Beijing to strike a deal. But then in the last half hour, possibly in response to President Trump's comments in Time, China's embassy just said they are not having any talks on tariffs and that the U.S. should stop creating confusion. The interview with President Trump took place on Tuesday, but was only released this morning at 6 a.m. Now, to discuss all of this and try to make some sense of what could happen next, Kyle Bass, Heyman Capital Management founder and chief investment officer. So let's just start with your take in terms of, as an investor, how you should read.
The American flag bed sheets is crazy. Kyle.
To the extent you do, Time magazine.
The button-up shirt with the vest and no tie. Guys, is this making you a little uncomfortable? It's a lot of things making me uncomfortable. He's got this, it's not even suede. What is this, velvet? What is this, fucking cashmere? He's got a cashmere vest, fully buttoned up to the top, no tie with the American flag bed sheets. Something, you guys know what I'm saying?
And then these comments from the Chinese embassy.
Well, glad to be here, Andrew. I have a little bit more insight than the Chinese embassy and or Time magazine, and I think it's important to note.
Talk that shit, go.
That I would believe the U.S. administration 10 times out of 10 if you were talking about what's true and what's untrue as far as what's happening behind the scenes. You have to understand, we import $440 billion worth of goods each year from China. And they import $140 billion from us. In a tit-for-tat trade war, we win every time. And I mean win, meaning the pain is much greater on their side than it is on our side. And so you have to remember, this negotiation is primarily about China. I know we're talking about resetting our trade relationships with the rest of the world. We essentially implemented a 10% across the board tariff on roughly 4 trillion of goods, a little less. And then in specific countries, we ratchet that up. And of course, China is the worst. They're 13% of our imports, but they're 25% of our deficit. They are clearly the focus of our trade negotiations. And
we really just need a break back under to fill these wicks. Once that happens, I'm going to be de-risking the trade again. And then that's where I'll be moving my stops to break even. So I'm really just kind of waiting for this one drop back into the zone. Once we get this drop back into the zone, that's when I'll be de-risking this trade, mostly for the Friday risk that I'm starting to see here kind of build up with markets not really respecting these fibs. So I would like to de-risk as soon as possible. That's what I'm waiting for. One candle drop down.
So Kyle, if that's the case, I want to go backwards for just 1 second. I just want to go back to the who you believe story, which is, so your view is that the U.S. is in meaningful talks with China and that China is lying to its public and to our public that it is not in those talks?
I think that's likely the case. I think it's Chinese propaganda for them to say they're not engaged. They are panicked. And Andrew, think about this.
No. It's possible that they are. I believe, by the way, they are panicked. That is almost impossible not to believe. The question is whether they are engaged in talks. And the reason I asked that question is because you had Scott Bessent make comments earlier this week that were also suggestive that there were talks, and you had China effectively say that that was not true at that time either. And so it's very hard, I think, for the public to ascertain what in fact is really happening here.
What's really important to understand is China wants to save face. That's how they operate. We want a desirable outcome. And a desirable outcome here.
All right, seems like we're having a break to the upside here. I'm still going to be patient. I still believe in the system. But again, this is why Fridays are like the riskiest day to trade. Kind of when we went through the system, we said that Fridays are the riskiest. It's typically because of the unwinding of positions. We're starting to see some aggressive buying pressure coming in. But again, until we close above the previous highs, I still have to hold this trade and trust the system. So that's what I'm going to do now is continue to hold. Patience pays. My risk is already accepted. So if I lose this trade, that's the risk that I accepted. But patience is going to be the determining factor here of whether or not we can we can get that big push down and be able to unwind this trade in profits.
Is a mutual back down, and a mutual back down moving the needle much further away from China's asymmetric favor and back to what would be considered to be fair trade. We're focused on fair. We're not focused on free. We are focused on fair. We are certainly having those conversations. China will never admit that we're having those conversations. They'll never admit to be, quote, the weak one in the negotiations, Andrew. They are certainly in the worst position in these negotiations.
So here's a separate question, and it really is about negotiating posture to some degree, which is, let's stipulate and agree. Long term, the U.S. should have more leverage in this than China does, right, on a rational basis.
And short
Having
term.
said that, it appears that China, at least historically, has been a more patient negotiator and just more patient and willing to take pain than the U.S. has been, in part because of the way our democracy works and in part because of the sort of ADD society that we all exist in. And so the question right now is, as these negotiations play out, whether you think we can and will want to hold out longer than they will.
It's a great question. And again, you look to China, they said they grew 5.4% GDP last quarter. Their 10-year bonds are trading for 160, Andrew. Our 10-year bonds are trading at 440. Our short rates are 4%. Their short rates are in the ones. They have had a complete economic collapse. They have had a real estate collapse. Their banks are 3 times more levered than ours are. They have 2 banks with more assets than JP Morgan.
All right, hold on. He's describing the pros and cons of the Chinese banking system. Let me go back a bit.
And they will.
Yeah, it's a great question. And again, you look to China, they said they grew 5.4% GDP last quarter. Their 10-year bonds are trading for 160, Andrew. Our 10-year bonds are trading at 440. Our short rates are 4%. Their short rates are in the ones. They have had a complete economic collapse. They have had a real estate collapse. Their banks are 3 times more levered than ours are.
Their banks are 3 times more levered, and they just had a real estate collapse. So Chinese economy not doing too hot, especially compared to the rest of the world.
2 banks.
Shit, man. It looks like buyers are really, really taking the market here. Just got to hold this out, but it's not looking too hot. It doesn't look like we're going to get that push back in. So set your expectations there, folks. I'll wait for some kind of pullback. Maybe I can get out with minimal loss. Like if we get a pullback at least to break even. But either way, risk is accepted. Let's see how this plays out. This is the Fridays, man. That's why I really hate trading Fridays.
With more assets than JP Morgan. And we have a 26% stake in the world economy, and China has like a 17% stake in the world economy. You have to realize they've only been at banking, real banking, since they ascended the WTO. So they are facing a banking crisis, a youth unemployment crisis, a real estate crisis. Their 10-year bonds are 160, and they're telling the world that they're growing at 5%. It's a complete lie. It's obvious. Bond markets don't lie, Andrew. Chinese leadership lies, but the bond markets don't lie.
Yo, put that on a fucking t-shirt. Men lie, women lie, bonds don't lie.
So again, you're asking me if we have more staying power. We're the largest consumer in the world. We are still 4% of the population and 26% of global GDP, and we are the largest consuming nation in the world. Certainly, we can outlast China. Are there a few places where things are going to be painful? Yes, they are. There is no easy button here, but we must reset our relationship with them. We must
let me ask you two related questions about the reset. One of the things we've also learned in the past 24 hours is that Apple, which is had a huge manufacturing business in China, is planning to potentially move the manufacturing piece of its iPhone business that gets imported to the US from China to India. It believes that it potentially could do that within the context of maybe call it 12 to 18 months to get to India. What that also means, though, is they're not bringing iPhone manufacturing back to the US. Now, so I'm curious how you look at that. You may say that's a great thing because India is a better ally of ours, but they're not a perfect ally of ours. They're buying oil from Russia.
Yeah, like India is a very, very difficult story, but India is the largest democracy in the world. They have certainly and want to be, I think an India trade agreement might be the first agreement that gets across the line. I think it'll be either India or Japan, and you'll see that very soon. So what we're trying to do is focus our sights on trading partners that actually share our values. We share none of the values of the Chinese Communist Party, Andrew. The one thing we want from them is cheap stuff. And the writing has been on the Great Wall for a long time. Look, Apple itself has moved a quarter of its iPhone production over the last 4 years from China to India. Now they're saying, now they really see the writing on the wall and they need to get out. And I think that's likely to happen. In the long run, Xi Jinping has told us since 2017 that he's going to take Taiwan. And he told us 4 times in 4 diplomatic visits in 2024. One of these days, we're all going to believe him. Now, I know our leadership and our military leadership believes him. One day, Wall Street's going to realize that we've been trading with the enemy for too long and that this full decoupling may happen. And so fully moving our supply chains away, I think, is a good idea. If it's possible. And in some,
I think Wall Street knows that they're doing business with the enemy. They just prioritize profits and they prioritize stakeholder returns more than they prioritize national security or nationalism. And that's why there's so many there's so many American companies doing international business in China, not doing the same amount of business as the Chinese companies are doing here because there's so many limitations. But we can't invest in Chinese markets, for example, but they're all invested in ours. And so they probably have, a lot of these firms probably have billions and billions of dollars of Chinese investments. And so they're not going to sit here and criticize China or decouple. They have too much vested interest because China bought a lot of our domestic investments and they're holding us hostage. Not cool.
In some cases, I realize it's not possible. And those companies are going to have to face those realities when it happens.
Hey, Kyle, we spoke with Ambassador Burns earlier today, and he was of the opinion that, yeah, China has been the bad actor here. Just the way we've gone about this has allowed them to try and play a sympathy card, looking from other nations to say, be friends with us, be partners with us, when China is the one that has been doing all of this dumping, producing 2.5 times what they can themselves absorb domestically in lots of different industries. You sound like you're of the same opinion that we should be teaming up with our allies, our closest allies, and maybe not fighting a trade war on multiple fronts right now, focusing just on China. Would that be a fair assessment of your thoughts?
Look, it's my view that when you look at Mexico and Canada, you know, 2 of our closest allies on the North American continent, people say, how can we possibly, tariff Mexico and Canada? Everything we're doing in Mexico and Canada is related to China. Number one, it's fentanyl. The Texas State Police have confiscated 360 million doses of fentanyl, enough to kill every single man, woman, and child in America in the last 4 years alone. That has to stop. That's all Chinese chemicals coming in to the Mexican cartels and moving across our border. And transshipments of cars and other goods is the balance of the increase in trade between the US and Mexico and the US and Canada. So believe it or not, our Mexico and Canada discussions are really solely focused on China. It's not really on Mexico and Canada. And so the answer, Becky, is I think the entire world is going to focus and have to choose between the Western values and a Chinese position in Southeast Asia. I actually think that's how this is going to play out.
Our next guest has been on the front lines of managing the U.S.-China relationship, and joining us right now is Nicholas Burns. He served as U.S. ambassador to China in the Biden administration and has served 6 presidents, both Republican and Democrat, in his decades-long foreign service career. He's now a professor at Harvard's Belfer Center and ambassador.
All right. This is obviously, the trade's obviously not looking good. We've already broken above the highs. There's literally no retest, no rejection, nothing. So I'm just going to unwind this trade. I guess if we get one more wick down or like one more retest down, I'm going to close out all the trades, whether it's a loss or not, just to try to minimize the losses. Another reminder of why not to trade Fridays. It's every single time I tell myself, I'm like, yeah, but it's Friday, shouldn't trade. I just want to get on here on the live streams and kind of just, shoot the shit. And then I just see the strategy, and then I end up taking the trade. But let this be another data point that Fridays are not the way to go. I gave back some profits from the week. Fuck it, it's all good. We're gonna listen to one more. I don't know who this is. Oh, U.S. Ambassador to China, Nicholas Burns. Okay, so we'll listen to this one, see what he's got to say. I'm gonna wait for this correction that's playing in right now, and then just look to unwind my trades. All right. If we get a break back and closure back under the previous high, then it's worth holding. But besides that, I'm gonna have to close this out once we're in break even.
Thank you very much for being with us this morning.
Thank you.
What do you think is happening? Read between the lines for us here on the conflicts as to whether or not there are negotiations that are taking place.
I think that both governments are trying to figure out how do we climb down from the triple-digit tariff battle that they're in. I think that neither economy and really neither government can sustain a trade war like this at this volume and this depth of seriousness for several months. So I would anticipate that both sides would want to reach out to each other, probably quietly, and begin the process of trying to define, is there a trade deal in the future? And I think the logic for each of them and self-interest from each of them will push them towards that. But the problem is going to be how to negotiate this, how to do it effectively, because I think it will take some time.
We just heard from this Time interview with the president that was released just in the last hour and a half or so, that the president would like to see tariffs as high as 50% a year from now, that he could see that being out there. The futures did sell off a little bit on that. We were down by about 230 points. They've come back somewhat to down 150. This was an interview that was done on Tuesday, and the messaging coming out of the White House can change pretty rapidly. When you get your arms around it, the idea of a 50% tariff, is that sustainable for the two countries versus the 145?
All right. Well, I'm going to close out half of my positions. I'll probably just leave 1 or 2 contracts open. That way, if it drops back in, then maybe I can, recoup some of the losses. But I'm going to jump out now before it hits stops. Mostly just to protect, really just to de-risk. So reduce the total risk exposure that I have, and then looking to just jump out as soon as possible. Clearly this trade is not going our way. And so the sooner that I can get on the sidelines, the better it's going to be.
5% today?
It would be enormously harmful to both economies if that's going to be the level going forward for the next couple of years. China is our 3rd largest trade partner. Our trade volume was $642 billion last year in goods and services. For China, we're the largest export market. And so 50 to 60% tariffs would have a significant cut in export in the trade balance between the two countries. There are upwards of 20 to 25 million Chinese workers who depend on making things, manufacturing, to trade with the United States. There are about 1 million Americans whose jobs depend on trade with China. So those levels, and those were the levels that candidate Trump talked about in the 2024 election, 50 to 60%, I think would be highly.
All right, closed out all my positions. I left one open just in case we get this retracement back to the downside. But yeah, you win some, you lose some. I'm never trading Fridays again. So if we do a live stream on a Friday, don't expect to be trading from now on. Just a side note. But I got to put this into my journal and just kind of put another data point like, hey, every single time it's Fridays, that's the day that I give back the money. So whether it's a win or a loss, there's a lesson in every trade. And this one is a lesson I've obviously learned before, but I guess just needs to get hammered in.
Destructive to this relationship. And strategically, what both countries have to figure out, particularly the United States, is do we want to see a decoupling of these two economies? In my view, that would be highly disadvantageous for both of us, for the United States especially, but also for the global economy. So no, I don't think that's a logical landing point for these upcoming negotiations.
Ambassador, here's the question, though. It's a leverage question and it's a timing question. Clearly, we are the biggest economy in the world. I would imagine, hopefully, on a long-term basis, you would think that we would have leverage. We would have, there would be a good reason for folks to ultimately invest in us and to make a deal with us. Having said that, the short-term pressures that we're facing, the way the market works, the way our democracy works, the way voting works, puts an enormous pressure on us in certain ways to make a deal or not make a deal. Maybe you don't think so. I don't know. How do you see those pressures, and how much patience can we have versus how much patience can the Chinese have?
Well, Linder, I think your calculation is correct. I mean, there are short-term pressures on President Trump and the United States, as there were on President Biden when he was in office. There are market pressures and political pressures here in the U.S. in our open democratic society that obviously are not impinging upon the strategy of Xi Jinping. But having said that, Xi Jinping, I think, needs a deal with the United States. His economy is slowing down. A lot of people don't think they grew by 5% GDP growth last year. It was more like 3.5 or 3.7. They have a significant problem with foreign direct investment. It was down by 32% last year. The property crisis bubble is still affecting the economy. So I think that the pressure works the other way as well. Xi Jinping needs a deal to stabilize the economy. They don't want to have a prolonged tariff war with the United States. And so that gives me a little bit of encouragement to think that both sides, logic would say, need negotiations and need some kind of a deal, not at 50% or 60% tariffs, but somewhat lower in the future. And I'd also like to say, China has been portraying itself in the last few weeks as the responsible party here. But China is not a victim. China's been a major disruptor in the international trade system.
And that stop loss hit. All right. I wouldn't be surprised, especially on some Friday shit, that the market breaks through the stops and then comes all the way back down. Basically, I would not be surprised if the market closes exactly where it opened. I want you guys to pay attention to this. So the market opened. Let's see where we're at. Right at 9:30. So let's just say 19,200, the bottom of the range. I would not be surprised if the market comes and closes here. Closes back here at the end of the session. It's still a bit early. We probably have another 40 minutes, maybe another hour before the market completes that cycle. But yeah, something to keep an eye on, especially if you guys are interested in learning, interested in studying how the market breaks through zones and what does a continuation look like versus an actual reversal. Keep an eye out on where the market opens and where the market closes today. I'm going to let the U.S. ambassador to China finish his statements on the China trade relations, and kind of obviously every U.S. representative is saying the same thing, which is Chinese economy is very weak. We have the advantage and the leverage in this relationship because we're the net importer. And so they need to make a deal ASAP before they're fucked. And China just seems to be signaling or saber rattling to the U.S. while also trying to give, confidence to their citizens that they're not getting bitched around. And so I think that's really important here. And that's what we're going to, be hearing from every U.S. representative. So let's see what we got here.
For well over 2 decades now. And that's why President Biden raised tariffs on EVs 100% last year.
No, I'm not going to roast him. People, I don't need to roast everybody, right? You know what I'm saying? Like, it's not like there's tons of material for me to cook. You know, I'm just going to let
11 months ago on semiconductors, on lithium batteries. And it's understandable that the Trump administration wants to have a hard-edged policy here to try to make sure that the Chinese don't take advantage of us.
Is this a trade war that you think we should be fighting specifically and only with China?
I think the better strategy for the United States would have been not launch a tariff war against Japan and South Korea and the European Union. All those countries have essentially the same interests that we do. We're trying to protect ourselves from unfair Chinese trading practices. And had we started with those countries on our side, that's about 60% of global GDP. That would have given us enormous leverage. And right now,
so that's the last thing I'm going to say before we hop off here, but I'm going to let this play out for another 2 minutes. But in terms of the trades, like this, the only trades that I take are ones where I assume that the trade's not going to work. And then I have to ask myself, do I accept the risk of this? Like, is this a trade that I'd be okay with losing? That's how you can tell whether it's a high probability trade or not. If this trade was to lose, could I justify it to myself after market close of why I took this trade? And so the trade that we took today, I'd take this thing 10 times out of 10. On any other given day, Monday, might see the same exact pattern. I promise you I'm going to take the same exact setup. But Friday's unwinding of trades negates the strategy. You guys get the drill. So the efficacy of the system is not in question. This is, if you have an 80% system, out of every 100 trades that you take, 20 of them will be losers. You guys understand? Out of every 100 trades, 20 will be losers. Now, what happens if all 20 come back to back at the beginning? Most people would get to 5 and just start switching their system or their strategy. But then you'd be giving up an 80% system. And so this system is that effective. And the biggest lesson I would say, if anybody did have any like disastrous consequences, would be your risk management is the only reason why this trade was significant. If you keep your risk the same across all those 100 trades, the math is going to make sense. Now, if you're switching your risk and you're going heavier on some and you're trying to play God and figure this one is better than the other one, and so I'm going to double my risk on this one, then one of those 20 losses could wipe out your account or half your account if you're over leveraging. Understood? So keeping your risk management the same, understanding the statistics of your strategy, and then understanding whether this trade was a function of market circumstance or whether it was a function of a trader error. I don't think that this was a function of trader error. I'm actually willing to say that this is just a normal part of the system. It's a loss as part of the expected parameters of the system. And that's why there's no big deal. Monday, come back. You guys are going to see the same exact pattern. I will take the same trade. Just throwing that out there. All right.
now we don't have that particular leverage because we're fighting a tariff war with our closest allies. So I think that was a tactical mistake a couple of weeks ago.
I'm sorry, you said Japan, South Korea, what was the third country?
The European Union.
Oh, and the EU. So
Yeah.
is there a chance for a mulligan of sorts with this? Is there a chance to say, okay, we're going to do quick trade deals with Japan, South Korea, see who else we can work out, Canada, Mexico, and then turn around and focus on China very specifically after these new deals that President Trump can say he's gotten?
I would hope there is that opportunity. I was encouraged that the Treasury Secretary Scott Bessent said exactly that about 10 days ago, that they wanted to work now speedily with the Japanese, the South Koreans, and I hope with the EU to try to have early trade agreements with them, if that's possible, to bring them over to our side. You know, the Chinese, I think, don't understand how much their dumping of manufactured products has unsettled global markets. One of the things the EU is concerned about now is if China is shut out of the U.S. market, China might try to flood the EU market with lower priced goods, dumping goods. You know, they're producing 2.5 times the Chinese domestic demand in EVs and solar panels and lithium batteries and steel and robotics. So I think actually the United States would have a lot of leverage if we could bring those allies to our side to compete with the Chinese in a very strong way at these negotiations.
Well, it sounds like it's a lose-lose situation for China. If they've been dumping this much on the market 2.5 times in all of those sectors from what they can possibly produce in order for them to reach an agreement.
Looks like USD JPY is about to hit that next leg up. Perfect 88.6 buys, perfect 88.6 sells. Wow, 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 wow. Daily time frame USD JPY. Okay, this strategy works on any pair in any time frame. This is exactly what I was expecting today. Get a massive pump up, retest 886, and then a drop back in. Now we have a double bottom at the buy side 886. I'd look for a turnaround. If you guys are swing trading currencies or you're trading CFDs and you can hold through sessions, USD JPY longs definitely something to keep an eye on. If you look at the DXY very overextended to the downside. Okay, so the magnets are back in. We're going to see a pull back into the zone here very soon. We might have one more leg down, but we're going to see a pull back into this range very soon. This is the healthy, acceptable range for the DXY, 99 to 107. Now, if America wants to make the US dollar weaker in order to have better trade balance, like we get, the more people would want to do business with the US if our currency wasn't so overvalued compared to theirs. This thing could keep dropping because of not organic, like natural market circumstances, but because the US government puts pressure on the dollar and does this synthetically to keep the value of the dollar down. All of that, barring all of that, barring any intervention from the US and from the Treasury, very likely to see a pushback to the upside. Okay. And so USD JPY, same thing. That's obviously correlated with the DXY. If the DXY pumps back up, so will UJ. Gold, obviously one of the biggest winners of the year. We talked about commodities last year and this year having the best year ever. Bitcoin seems to be rebounding. So this actually could be the recovery, the full recovery of the crypto market as we're seeing here across all these different instruments. What a beautiful rejection from XRP. We had two entry prices, 1.98 and 1.55. And then we've rejected the 1.55 zone, now ready to retest again, 1.96 and continue up. I have been buying very minimal cryptos, but I do need some more capital here to go crazy with buying crypto before this next pump up. I'll be releasing my full list to Chart Addicts members of all the cryptos I'm looking for. That list should be coming out in the next few days. All right. Pain. Like I said, we're very likely to see that drop all the way back in later, but that's just trading on Fridays in the circumstance we're in. All right. Happy and safe trading, everybody. Happy Fridays. We'll go through some more new stuff tomorrow. Tonight, if you're a Chart Addicts member, maybe we'll just fuck around. Everybody grab a drink, grab something. We'll hop on, look at the trades of the week, go through pros and cons, let you guys share your screens, have an open discussion. So if you're interested in that, I'll see you guys tonight, 7 p.m. And tomorrow, if you guys are UFC fans, I might just be live streaming. I might be just doing like the FX replay challenge, going back and forth. Maybe you guys can compete with me. We can do a leaderboard while I commentate the UFC fights side by side. So if there's a mutual interest here, you guys enjoy watching the sports and you guys enjoy the trading, you want to learn something on the weekends, let's see if we can combine both and do something productive tomorrow. That'll be a lot of fun. Okay, so Chart Addicts members, lots to look forward to. Everybody else, please drop a like and a subscribe on the stream on your way out so that this thing can get recommended to more people. And of course, happy and safe, well, there's no trading left, but happy and safe weekend, everybody. Catch you guys on the flip side. Oh, click the link in the description to sign up for the NASDAQ Masterclass. It's the single best strategy that you guys can learn for day trading. If you guys day trade indices and you'd like a very simple, easily duplicatable, and tried and tested strategy, look no further. You found yourself in the right place. Your trading journey has been stressful enough. It's time to make it easier. Click that link, sign up for the class. I'm going to teach you guys how to boss up your trading. And then I'm going to let you guys go into the open market and watch you guys flourish as the skilled traders that you know that you can be. Okay? Take it easy, y'all. Catch you on the flip side. Peace. Members, I'm going to catch you guys tonight for charts and chart